and welcome to Finance 360. So that being said, we are here today to acknowledge the past achievements, celebrate the present, and strategize for the future of the corporate world through finance. So I would like to call Kshitij on stage, who will be talking more about Keka and the agenda for today. So please put your hands together for Kshitij.
Thank you, everyone. Thanks for the greetings. Let me start with my introduction. I'm Kshitij. I'm a process coach here at Keka. Typically, over the last decade, I've been helping organizations design talent management processes, migrate from more command-based leadership models to more trust and purpose-driven leadership models. So the entire journey of Keka, let me quickly start with setting up a reference about that. So we started building this platform somewhere close to 2015. 2016 is when we launched ourselves into the market, and today we talk about 2023. Right, we have close to 1,000 employees working for our organization with close to 8,500 customers across India today that we provide or power through our HR tech. So this phenomenal growth, what we very largely believe is basically from the community itself. So I have been part of this journey ever since the inception. 2016, we used to sit down in a room with like close to 20 to 30 people and figure out that what is the reason and the purpose of building a company, an HR tech platform. So the core, while we started building this, was focused more on building, bringing in more employee engagement, employee experience by being more transparent and accountable to the people. But eventually, over a period of time, while we started building the platform, all the different kind of metrics that we used to capture in HR, we were trying to bring out outcomes through them. So that is how our linkage with finance happened over a period of time. A couple of years later, we launched our first payroll engine, which was an Indian payroll engine, which can take care of payrolling, keeping the HR-centric data into the platform. Today, we stand tall with providing services to 8 different countries with payroll processing solution for all of them. Now, in terms of what Keka does, Keka is a hire-to-retire employee management platform, largely from the talent acquisition to all the different HR ops functions which you require to do, from managing your leaves, attendance, expenses, and all the other relatable data over one single platform. We also help the organizations in the complex jargons of performance management or timesheets as well. So with this, this was a quick summary about what Keka is. So for the next activity will be a panel discussion, and we have a very illuminating set of panel speakers who will be giving you all the different kind of information relatable to the finance. So for that, I would call upon Nisha to give an introduction to the panel speakers.
Hello again. So we have 4 speakers for tonight, and the esteemed panel includes, first would be our moderator, who is Ruchita Ruchi. She's the finance head at Keka, holding 15 years of experience with varied companies across the globe. So the first speaker today is Mr. Prashant Jain. Prashant is the founder and managing partner of Samasti Legal, which is a boutique corporate and commercial law firm based out of Hyderabad. He is also an advocate and a qualified company secretary, having worked with a lot of companies over the last 15 years and working with 100 billion worth of investments. Please put your hands together for Prashant Jain, guys. Next up is Mr. Vaibhav Joshi, an effective leader in finance. Vaibhav is the CFO of NephroPlus, with a proven track record of executing high-impact growth strategies, mergers and acquisitions, and creating efficient reporting mechanisms. Vaibhav is also a qualified chartered accountant and a certified information systems auditor. Thank you so much, Vaibhav, for joining us today. Next up, we have Mr. Praveen Jalan. He is the fellow member of the Institute of Chartered Accountants of India and the managing partner of Integrity Advisors. He has over 16 years of experience in the areas of advising, auditing, and accounting. Prior to Fintegrity, Praveen has been worked with very highly reputable accounting firms like SR Bartley and Company and Walker Chaindoik, which is also a branch of another accounting firm. And he specializes in the areas of audit, gap advisory, tax and compliance, internal audit, fundraise, valuation, and more. So that being said, I would like to please call the speakers on stage with the moderator. Our 4th speaker for the day has also come. Thank you so much, Mr. Satish, for that. So this is Satish Kota, who is a true business enthusiast, a finance executive with the right mix of business acumen and financial planning. He is also the founder of multiple companies across the globe. He is also the founder of a payroll software service in the US. So can I please have the speakers on stage with the moderator?
So first we start with the importance of analytics in modern finance. So we have industry experts, plus we have audit and labor law compliances experts here. So I start with Satish, sir. What are the expectations CFO have with HRMS software and payroll management software in terms of analytics and all?
Hi guys. Hey. To begin with, my thoughts are like, the CFOs or finance leaders should not see HRMS as a separate application apart from their ERP application. They would be successful only when HRMS is part and parcel of their ERP, and the information related to HRMS has to be seamlessly flowing through their business intelligence and dashboards, and all the analytics when they look at a finance dashboards or a CFO dashboards has to get enough weightage for the HRMS information flowing into. And one of the major challenge that we deal today as CFOs in the market is when you say, what is my payroll number, you get to hear different numbers from different sources. One will say with consultant, one will say without consultant, pre-tax, post-tax, before compliances, before PFESA, after PFESA, somebody adds gratuity component. So having the definition agreed between the department like HR, finance, etc., and having to make sure the whole organization talks the same number is first expectation from the CFO world when they talk to HRMS. And two, a seamless flow of information from HRMS to centralized decision support team. It could be people, it could be data warehouses, or it could be business intelligence, or it could be dashboards of a CFO. And three, the data that they are accessing or the information that they are accessing as CFOs has to be correlated to the business. So analytics is always seen in line with businesses and the transactions in the business, not in silos saying this is my attrition. The attrition may vary. For a call center, attrition could be 36% is considered healthy, and for a technology company in the current years could be 40+%, and for an infrastructure industry probably 10 to 14% is acceptable attrition. So the customization of ERP implementation, HRMS implementation, and having to divert the information into the dashboards based on the industry, and the customization of information that you get from HRMS has to be for the industry. So the HRMS should have the capabilities of generating analytics or dashboards based on the industry for which it is. So that means it is not only the technology capability, it is also the capability of the people who are implementing it. So we can take Keka as an example. The Keka is expected to have expertise about various industries who is implementing HRMS, and they should be able to do a value addition during HRMS implementation for data inputs to garbage in, garbage out, to analytics, to business intelligence, and that is what I think is the biggest expectation of CFOs these days.
Agree, totally agree. I love to have your inputs also in this. You are in this industry for more than, I think, 15 years. You might have implemented 3-4 HRMS software with HRM. And every year you might have analytics.
Yeah, so I think Satish has covered most of the points, I would say. But just to add what Satish has told is that we need to, all this analytics and all should help us in making decisions. And I think some of the times what happens that we have so much of the data cuts confused that how to see the things. And I think that is where this understanding the need of the industry and understanding, some of the times what happens is that with all the ERP, generally they face that problem. It's like shirt is prepared and they'll tell people to fit into that shirt. And if they are not able to fit in, they are saying you are unfit. But all the HRMS or ERPs and all is to understand what is the organization's requirement, what is the organization DNA, and what are the numbers they are looking for, and work around that. So just adding to it that analytics plays an important role, but it has to customize as far as business requirement. Way software company looks at people as the construction company versus a health company like us. Uh, all places, same people, same cost, but viewed differently. Analytics plays an important role, but it plays an important role, and be it any kind of an analytics tool, it has to help in the final decision making, and it has to contribute to the larger goals of the organization. And at any given point of time, it need to have that pulse, that what is that 2 to 3 KPIs which I need to review on a longer time. Yeah, that's it from my end.
Pure requirement, industry-wise requirement of what your KPI should be.
Yeah, and that's the point.
Ruchita, just want to add to what Satish and Weber spoke about expectations of industry on HRMS side. So now, as you see, market is flooded with so many, HRMS softwares. Expectation is growing. So earlier we were expecting prescriptive analytics. Now the industry leaders are expecting predictive analysis. Now, where we get data insights from HRMS, which will help us project, what kind of attrition we will have, what kind of resource requirement we will have, so that the company can plan in, various departments. So this is one thing which, I see as a growing demand from industry as far as HRMS is concerned.
Thanks, Praveen.
The analytics that we are looking for as finance leaders is what I need yesterday may not be my need today, and what I need today may not be my need tomorrow. So what I would expect is, one, a standard set of reports, analytics done by the system.
Yeah.
Two, prescriptive by the system to prescribe, these are, hey, here is happening. Looks like you're, and I was looking into my glucose today, and it says, looks like you need to, your levels are going down. Looks like you need to do this, this, this. It is popping up instantly. So some of those instant suggestions and thoughts and analytics based on the situation is needed. And two, it should always have a flexibility and agility to do what I need. Today, my want should be only to look at an attrition of a function. But tomorrow, when my board asks, when my investors ask, I should have the ability to mine further. So as a click, I should be able to go down a level down, 2 levels and 3 levels down, and make some analytics out of it and give something. So 100% cannot be left only for the system to analyze and give it to you. The system should have flexibility to access and give me the data the way I want. I think that's important. Yeah.
Okay. So apart from this, yeah, definitely we have all this feature inbuilt in our systems, and we provide all the type of analytics, and we customize it according to industry, according to the company requirements and all. So that we do in Keka, but going forward, yeah, we have different kind of dashboards, different kind of analytics where you have attrition, you have payroll, you have budgeted cash flow, payroll versus budgeted payroll run. Those all analytics we have. We have attrition rate and the backfill also, how you can plan your backfill in the system. So on those basis, cost optimization, how you will do. Those all are there, but yeah, going forward, we will see how much we can explain it. But having system there, having product there, like in implementation is always a challenge in CFO. So what is the major challenges you guys in organization commonly face when implementing analytic solution or any kind of software? And how you want to overcome of those challenges?
First thing, when there is an IT implementation, we think it's the job of the IT department to take care of it. If not internal IT, then we'll say it is the company who's implementing it, is their headache.
Yeah.
So they are the one who are the driving force behind implementation. Rather than I am the chief HR officer, I am the chief financial officer, it should be my responsibility to drive what I want. Second thing, none of us, typically is an expert in it. So because we are not experts, we look for a consultant to come in. So now you have 3 players. One is yourself, you're on the function, you have a consultant who is helping you, and you have HR implementation or a ERP implementation company. So probably the responsibility gets shared, and it's like a ball will be moving from one court to the other. My thought or suggestion is like the one whoever is the sponsor of a CXO, whether it is a HR, finance, technology, has to take single ownership, drive the project, implement it, phase 1, phase 2, phase 3, and analyze what was agreed at the time of selecting the product versus what has been real results. And the constant engagement with the product company is very important these days. And two, please understand, if the company has decided to spend so much ABCD money, spending 5% more or 10% more is always important to get the outcome, rather than really counting every penny at a budget level and saying, and I will not spend more than 2%, 1% kind of thing. I think gaining the benefits out of the project investments is very important rather than looking for a penny is my thought.
I completely agree with you, Satish. Just to add on there, I would like to say that any kind of an implementation, first you take stakeholders on board. And I would say, as a C-suite executive, we know what is right, what is wrong for the business and in a larger scheme of thing. But where rubber meets the road is the executive level who will be taking care of this implementation part. So taking them on board is very critical. And most of the times, what I have seen is that the person who need to get benefited out of it, or the person who is inputting that information, or that why need to be explained properly in any kind of a ERP or any kind of a change, if that why is not aligned, then most of the times project get delays and it takes longer time to implement it, and that synergies which you expect takes much longer time, or sometimes there was so much of a fatigue of the implementation that you get into that mode, kaisa bhi karke implement ho jaye, just get rid out of it. So I think that fatigue need to be avoided, and just see that whatever threshold you have put across for the project part, like critical path has to be defined, and make accountable person, one person accountable. If 3 people are driving the project, then just like that, anything which is to be driven has to be driven by one person, otherwise multiple direction related issues you will see, and at the end of the day we are people, and that ego issues generally happen. So I think that also need to be managed. It is a system implementation which is done by the human, and human are very I would say subjective behavior in a different scenario. So I think people is an important element of any systems implementation project.
Ever you have thought about this, ki instead of people, if the migration done on the automatic process or something from one software to another software, it will be the easier options?
So at the end, it looks like that my life will be better with all these things, but we need to see that how we are going to do it. And till the time we don't have an answer for how, then it's first you need to be clear how you are going to do it, because it's like this: everybody want to have a fit body, everybody wanted to have 6 packs, everybody wanted to live a classy life, but how you are going to do it is more important, and how much commitment you are putting into it. So in this also, there is no, and I would say there is no discussion about the end goal. Everybody wanted to have a best world to live in. But are we prepared to be a best world? Are we behaving in a best world? So I think most important part is how we are going to do it. How are you defining that these are the 5 steps required to get an end goal? I think that is something process is more important. You need to have an outcome in mind, but how you are going to do it has to be sorted first.
In my view, I see challenges in 2 sets. One is that companies need to have a clear strategy as far as data analytics is concerned. The outcomes, what they are looking at, what kind of metrics they want to see, so that it will help them in selecting the right software. Because so many options are available, so many tools are available. Unless you know what you actually really want from the HR analytics, you will not be able to make that decision. So that is one set. And second is about data. I mean, somehow companies in India are not used to live in a data culture. A culture where decisions are driven by data. So the quality of data has to be good. What goes into the system, into the HR tool, so that the output is right. And how do you integrate? How do you source the data from various sources in the platform? So that also becomes very important. And lastly, maybe security of data privacy and security. I mean, in the current context, I think that is also a very important challenge what the company has to consider while implementing a new HRMS.
Prashant, you and Praveen has done audits of lots of company. and in terms of payroll, labor law, and stat audit. You have faces this kind of thing कि software is there but not yet implemented, running on Excel, कि अभी हो ही नहीं रहा है software implement.
I can tell you, we spend a lot of time doing only reconciliation. As Satish mentioned, reconciling pay sheet with the payroll, with books of account. So that itself, takes a lot of time. A basic thing, but a lot of our time goes into, reconciling information coming from various sources for payroll. So this is something which has to be fixed. If Keka will do this, I think, kudos to you. It will make our life much easier and better.
So on the compliance part, Ruchita, when we do the legal due diligence, the common comment which we see across the DD reports which we issue is basically the non-maintenance of the registers, which is basically required under various laws. So if you see the labor laws in India today, from Minimum Wages Act to Maternity Benefit, Bonus Act, every act requires maintenance of certain documents and filing of certain forms. So the DDs which we do, there we see that all the companies don't adhere to the requirements in terms of the applicable law. And I have seen companies where, maybe very, very rare, where there are software tools which are being used by the companies, and there we tend to see that there are what do you call compliances issues taken care, because in the market today, if you see the laws which have been framed maybe 50-60 years back, the enforcement is very, very poor. Because of that, the company doesn't have any what do you call motivations to comply, and the investors who are coming and investing in the company also are not serious. But now I think with the new wage code coming in, then the data protection law coming in, this has to be taken very, very seriously, because maybe if you take the example of the data protection law which is coming in, which has been recently implemented, there I think if the companies are not implementing the policies of data protection and the employees are not given proper training, then it becomes very, very what do you call tricky for the company, because there could be class action suits which can be filed by the companies. So now it is the time where the companies have to take their data integrity very seriously, and they have to make sure that the employees are adhered to it. Otherwise, culturally, it will become a lot of pain, and there will be a lot of enforcement going forward from the government. So I think now using the AI or the available software becomes very, very important for all size of companies. It's not that only large companies should use, but I think smaller companies also have to use the software and make sure that the labor compliances are properly done. So I have seen issues from posh side also, where companies don't, the committees are formed, but they don't even know what are the labor laws. So I don't know how Keka is solving the compliance part of the other laws, but this is also very, very important, where the panel members who are sitting on the PASH committee should know the law, because I have seen for checkbox compliance, people are sitting on the PASH committee, but they don't know what to do when there is a complaint filed. So this is also very, very critical, wherein a software tool will be very helpful.
Yeah. Other than this, in Minimum Wages Act or other acts, is it if software is not there, they are not fully compliant software, or there are instances ki software is looking on the employee experience and payroll, but not complied with the labor law acts?
Yeah, so again, see, Minimum Wages Act is again different for all the states. So today in India, you have around 29-30 states, right? So there, all the states have their own laws, and the minimum wages in a lot of states are very, very dynamic. Every 6 months, the Minimum Wages Act changes. So we have companies where the operations are scattered across multiple jurisdictions, right?
Yeah.
So there, it becomes very, very difficult for the HR team to understand what are the laws which are applicable for that particular state, and then implement the minimum wages on a dynamic manner. So there, I think it is very, very critical. Again, if you don't pay the minimum wages, then there are a lot of penalties which will come and hit you. So having a software and tracking it for companies which have multi-jurisdictional presence in the country is very, very important. I think this is very, very critical for any company.
Just wanted to add on that what he mentioned, what Prashant mentioned is software will not solve out our problems. It will only enable us being successful.
Yeah.
So it is garbage in, garbage out. Software alerts us, software sends us reminders, but ultimately a human being need to take responsibility of the compliance. And two, in terms of the project management, in my life, I have seen a theoretical project management approach, PMO, or a standard project charter being prepared. Though it sounds very theoretical, it always helped in driving the project successful.
So whether you're a large company, small or medium enterprises, whether you're implementing SAP or Keka, irrespective of the application that we are in implementation process, we should use for a project management charter and a project management office kind of approach. And two, in terms of making a project successful, I think it is very essential we understand a little bit of technology and not just go by what a consultant says or what an implementation company says. And three, the question that you asked for migration from one to the other automatically, I have seen three such efforts going through, right from Tally to an SAP migration, or a Tally to another startup called Strategic ERP migration, and from Ramco Systems to Joho Books. I have tried everywhere. Because of these applications are built differently, the data tables in the back of the system are in different wires and different structures. They could never transfer data from one system to the other. You can all do is basic data of Tally opening trial balance, they can dump into BioLedger. You will never get any of the information of history into an ERP perfect. So my past experience is like, don't really put a lot of efforts to transfer data from one system to the other unless they are of the same make. Imagine you're upgrading from SAP one version to the other, or Oracle one version to the other, or you're moving from one startup's HRMS to Keka. Probably it is doable to with certain limitations. Yeah, thanks.
So, Ruchita, on the labor law side, as you know, Prashant was alluding to, Minimum Wages Act is a problem. So there are many companies that, in fact, we are currently handling two cases where the client is non-compliant with minimum wages, and this is very prevalent in hospital sector. This is very prevalent in hospitality also, where you have supporting staff in your hotel, in your hospital, nurses, IMRs, where you don't pay them as per the Minimum Wages Act because they don't know. Sometimes you don't know. Sometimes industry standards are so low that they are not able to comply with regulatory requirement. But it is right that the structures are very complex. I mean, within Telangana, if you do Google and download the requirements of minimum wages, I mean, for every industry there are different requirements, and there will be like 100 types of industries. So if you have to make a master chart in your software, if you can do, then that will be very helpful, because knowing is the first step to solving a problem, right? To ensuring compliance. So yes, I mean, minimum wages is a problem, and PF is another area in terms of labor laws where compliance is very much needed. I mean, I have seen many different companies have different understanding or ways of computing PF payable. Some companies will consider component X, Y. Some companies will consider component X, Y, Z for the purpose of calculating PF. And there are companies who have paid significant penalties for these non-compliances. So departments are also very active. They come, they verify, and especially in last 5-7 years, there is a lot of activism on the regulator side. So labor law compliance is an essential part of the business.
Yeah, but just you like saying knowing is the first step to solve the problem. People on our level, CFO level, we make the policy, we make the key, this is the PF rates and all, you have to follow. The following person is a simple accountant or senior HR executive. Might be they don't know the Minimum Wages Act across the countries. At that time, a software can help to knowing them how, what is the Minimum Wage Act for Telangana or Andhra Pradesh or Maharashtra. That is the only thing knowing should be there. Yeah, sometimes because they are a HR executive or they are a junior folks accountant of 1 or 2 years or 5 years of experience on BCom level who is running the payroll right now. So they might have not know. They don't come to you guys to ask that ki act play ho raha hai, we should act on this or not.
Will always help you comply with, and a smart system will always complement your compliance. Sometimes you miss it unintentionally.
Yeah.
So system will remind you you're not compliant in these areas.
Moving to the another says, how can analytics uncover the hidden insights which is not followed in our traditional finances? If so, in traditional finances, we do something. In traditional finances checklist, we just do the payroll. That's it. कि this is the wage act है, इसके हिसाब से we have to put employee ID, employee name, and that's closed. Our things is closed. In the now modern finances, we have lots of investor reporting. We have board decks. We have every day we are doing an attrition rate analysis. Someday we are analyzing the recruitment cost is going high. We have planned for 10 lakhs for this year, but rate is high, so we are paying more in recruitment cost. In these cases, how analytics helps?
As I think I've already spoken about it much earlier ahead of the question, is like when you want to really do, use analytics as a thing, in the modern era, like artificial intelligence or a machine learning based analytics are very, very important. For example, imagine you say I have an attrition of say 36% in this process. How do you define whether 36% is good or bad is probably something that latest analytics will tell me, or modern, we have to say, hey, for your industry, an average of 24 is a median. If you are well within 24, it is acceptable within the median of your industry. If you are at 36%, it's not appreciated, or something is wrong. And then okay, what should I do next? Then it should tell me, you are first 6 months of your joining, you're joining, they call it
Probation period?
Yeah, the kind of probation period, etc. In fact, they call it infant mortality equivalent word. It's a healthcare word, but they call it infant mortality in a BPO, for example. If somebody is put in from BCom or BA, MBA and put into a voice process, they can't really handle voice process well. They feel it very stressful directly to deal with a customer. Sometimes you straight from the college and you end up living into night shifts, colleges, etc. So typically people take 3 to 6 months to stabilize. Those who cross 6 months are successfully continuing. Within 6 months, you see a lot of attrition in the call center process. So these kind of analytics has to come from the system. The human brain may or may not be able to ask all these questions, but system should say proactively saying, hey, here is an attrition, but I noticed this pocket is an attrition challenge, or this pocket of first 0 to 6 months of joining is causing you an attrition challenge. Or you say the people whom, cohorts, right? The people who we hired from ABC college is a problem for you compared to other colleges. Or the guys who went through this project or this training program have probably have been showing more attrition. Imagine you work for a Deloitte or you work for large companies, the company sponsors CPA after you achieve certain achievement in your corporate. So a cohort can say, hey, because you've been sponsoring CPA and they've cleared, you see more attrition coming in this pocket. So some of these analytics has to come from the system rather than somebody sitting in a corner and breaking their heads to understand it more. Maybe they will be able to do it, but what a man can do in a day, probably a system can throw in a few minutes. And what I have learned over a period of time probably should have been a useful tool for somebody else who has just joined HR. So that's the advantage of technology. Yeah.
So, Ruchita, since you spoke of hidden insights, from this modern day data analytics, I am reminded of, I was looking at one of the, in seminars where one HR executive was speaking, and he said normally, whenever you sit in a meeting, the sales guy, the marketing guy, they will say, you don't know the business, you just give the information. We will handle, we know them. So this guy, he went and he did all data analytics, modern advanced data analytics, and he gave a formula whereby their sales productivity or sales increased by, and it's a Fortune 500 company, so it increased by 3.4%. And what he did, he used analytical tools to identify that if we hire sales people with a particular background, say from a particular area or with a experience set, 1 to 3 years, they will generate maximum productivity. So he said, now I have the answer, why I should sit on this table. Apart from giving you data, I can also give you solutions. So this is coming nothing from, but from HR analytics. So yeah, this is, possible. And apart from the traditional regular, data analytics, HR analytics will also help the gauge the employee mood. You can say, a lot of feedbacks, what you get from employees, analyzing that and making some sense of it as to, how is the employee engagement and satisfaction. That is also something which companies in modern finance, they are using HR tools.
Yeah, so adding to what Praveen has told, and we are talking about analytics. So I'll come to that if analytics are working at a more macro level and understanding the larger picture. I'll go back to the days of telecom when I was working for a telecom company, and there are three pieces which generally an organization check. One is how many number of network sites are there and at what rate they are growing. Another thing is that company was at initial level at how many places they have their distributors and retailers. 1 point check. Third point is that how many collaterals, branding, posters, and these hoardings and all are there. All these were growing at 10 to 15% month on month. Business was growing at 3% month on month. And we were also thinking that if these three parameters are growing, my sales also need to increase. Sales was increasing, but there is a sudden dip in the numbers after 1 month or 2 months. Then we put it on a map that how's our sales force is divided. That sales force is there for entire, let's say, AP Telangana. That sales force is divided. How's the network? How many sites we are working on that? And on top of that, how the distributor and retailers are there. When we have put across one thing at another thing and another thing, we realized that where the network is there, there is no distributors in 30% of the cases. Where network and distributors are there, the targeted customers are not there. Or we have not put the hoardings, and where we have put the marketing and collateral and hoarding, at that, just on that site, our network was not there. So as an individual, we were achieving all the objectives, but as a group, we were failing. So I think that cohesiveness, if it comes in this analytics and all, it will really help. So that macro view is important, so that this small, that division wise or function wise goals are achieved, but that should keep in mind this larger objective of the organization.
I was so far thinking telecom only looks into ARPU.
When it is not delivered, then you look into these things.
So you have a strike data-driven insights from your software. It's like if I talk about the payroll software or other things, you have an insight, you have this payroll cost and all. You have to take decision on basis of those insight. But your experience are telling something else. So at that point of time, how you put your points there, how you think, how you go through the data analysis is saying something else, and your intuition to make the decision is saying something else.
So where there is, answer is simple, because as we are growing that 16, 17 years of experience and all, lot of things we have learned in the past, let's not carry that baggage. That's the one thing. And every problem which you are viewing or any problem which you are trying to solve, have this data-based decision making. The benefit of this database decision making, if you are able to correlate based on your past experiences, how you have taken certain decisions and other thing, I would say it's not a straightforward answer. Data is important, some gut is also important, and there is an optimum mix of it. It's not necessary that 100% data based you will be right and 100% gut based, because gut comes based on your past experience, at the same point of time how the trends are getting connected. So it's a hybrid answer for me, not that straightforward. But when it is people to people connect and all, at that point on time, at least in a conversation and all, you can gauge whether you can go ahead with this company or a firm or whatever product they are offering.
Praveen, you have any thought in this?
In the long run, Ruchita, you have to go with data. I mean, guts is okay. Guts is only one more layer to your decision-making process. But underlying information is data, right? So, but yeah, guts will help you, give you a direction. With experience, you sense, when things go wrong or when numbers don't make sense. And this is why I said at the beginning that, data quality is very important in any analytics, especially HR analytics, because the garbage in, garbage out. So, but yeah, guts is important, I'm not saying, but data is gold. So
To add if you don't have to responsible, I mean, if you don't need to responsible, I mean, give a response to somebody, assume you are the owner of the company, you can always go on a guts basis. But if you need to give a response to somebody on a failure or a success, you have to go only with the data that will protect you at some stage. I'm sure you come from medical background, right? So evidence-based medicine is always protecting the doctors. Why we always complain that the doctor gave me this big list of tests to be done, and that is done because he's advised, he's expected to do an evidence-based medical treatment. And a failure in medical treatment will put him in jail if there is no evidence. So he says, I want to check that BP, I want to check the blood results, etc., and then give you a medical treatment. Because tomorrow something goes wrong, he will say, hey, I went by medical report and not by just my thought process.
So moving to the next topic is cost optimization and savings and growth. So everybody, I think in finance, once in a year we goes that majorly in quarter 2 and quarter 3 quarter 1 and quarter 2 is growth, quarter 3 and quarter 4 is cost optimization for us, where the all cost cutting comes in the picture. So you are responsible for cost optimization. We make the policy, we go through the data, you make the policy on basis of cost optimization. How you ensure that cost optimization policy has been implemented properly? Because at the end there is lots of things goes beyond our eyes also. There is somebody else who is checking all the things on behalf of us. So how you make ensure?
I think we need to change the perception, saying, CFOs means cost planning, cost optimizations. We have moved on, and we now look for what the investor wants. Without which, we wouldn't have created these many unicorns, right? So that's reality. And two, my view in the current generation of CFOs, none of the CFOs would be looking for cost optimization as their key deliverable. They look for what investors want. If it is listed, what stock market investors want. If it is private equity or a VC invested, what the investors want. Mm-hmm. So depending on the stage of the company, in a growth stage, in the angel stage, no one really looks into cost. They only look into what metrics the investor is looking for next round of funding, mm-hmm. and what metrics the analyst will look into for increasing your stock price in the market if it is a listed thing. Coming back to cost optimization or saves will come when a board or when a leadership decides to say, hey, this year let's cut so much cost, however my revenue need to be protected. So it's not like, okay, decided to cut a cost, I'll cut these many people, I'll close these many offices. It never works that way. So you constantly be looking into your other impacting things like your top line, your bottom line, your operating margins, your gross margins, etc. And based on that, you will be slowly taking decisions to reduce the costs. And third aspect is, cost optimization need not be always based on an action towards taking out people or closing offices. Most of the cost optimization that you see is bringing out of efficiency, automation, deploy technology, replace human beings, automate decisions, reduce timing to take decisions, invest in the infrastructure where your cost of operations is lesser compared to operating. So in case operating cost is more, you go for investment into the asset. In case operating cost is lesser, so from investment into the asset, you will go to operating model. So physical infrastructure to SaaS or AWS, cloud models, and vice versa. So I see all optimizations are not always bad decisions. Not always impacting others. It's only towards improving the ratios that we accept to it.
Yeah, so just adding to what Satish has told, I think cost optimization over a period of time, I think the word is being replaced, cost optimization, with a value creation. And value creation might come at adding some bucks to the top line, or in terms of how I can add value to the bottom line while reducing the unnecessary layers which are not contributing to the businesses. So giving you some example, like at this point of time, everybody is looking at how the business is growing and how we are contributing to the growth. And at the same point in time, are we using that arbitrage opportunity at the right time? I would say when there is a funding crunch and you are sitting on a decent bank balance, this is the right time to go for an acquisition. That's the right time because a lot of company or lot of targets will also be running out of money, and that is the time when you can create a great value. best deals are made in the worst times, I would say. That's what my past experience is. And apart from that, this cost optimization, if we talk about in detail, it's more about charting the goals, what you want, put a framework and make a person accountable and just do ruthless implementation. There is nothing like that. If you have decided to do something, just do it in a project manner, like this is what I need to achieve, this is what we need to achieve over a period of time. But broader less, we as a community also need to change this perception that cost optimization, people start looking at CFOs. No, that we are there to co-create value for you. Over a period of my tenure at Nephro Plus, many times I have pushed that increase the BD team. If you have more foot on the ground, at least you will crack the more deal. You have clocked 30 dialysis, 30 acquisitions in a year. You need to go for 60 and 70, even though, and buy versus build. That building is quite good, I would say, in those times. So it's, I think now 5 years back, it was 30-40% of our major KRA, but it's more about now 20% of the part on the cost optimization, but seeing all other levers of the business, how it is looking. Like vendor financing is one option which people can also evaluate in terms of adding value to the business. Bill discounting is another way where you can make your efficient working capital, negotiating with the banks on the better terms, or lot of financial leverage options are available in the markets. With that, you can create more value, I would say. Yeah.
So cost optimization in the context of HR analytics, one thing that I can think of, and what people increasingly in the industry they are looking for, is return on investment. How do we calculate it on HR initiatives? For example, companies do a lot of training and development programs for employees. So what is the cost it is incurring, and how much change in productivity or efficiency it is bringing? How to measure this ROI on a lot of these initiatives, whether it is training and development, or say employee engagement activities, employee wellness activities. A lot of companies in recent times, after COVID particularly, they have spent a lot of money on employee wellness. So in terms of the return on investment, how much it has saved for the company, whether it is reducing the attrition, increasing the efficiency, productivity, whichever way you want to measure. So that is something I can think of. And cost reduction on HR side is something which is very tricky. I mean, a lot of times in pursuit of reducing the cost, companies, they end up on the wrong side of the law, doing something where they cut on the statutory compliance side. This happens very quite often, unknowingly. I will not say knowingly, but it do happens, because if all of you have noted in recent times, the compliance, as a company, you don't have to only ensure your own compliance, your company's compliance, but increasingly you have to ensure that your vendors are also complying. So if you look at labor laws, for example, you have to ensure that all your vendors who are supplying, say, laborers, workers, employees, say office staff, whether they are complying with labor laws or not. If you take GST, for example, increasingly you have to ensure whether your vendors are filing GST returns or not, whether they are paying it on time or not. So it is not about only your compliance, but also ensuring compliance for your vendors and suppliers, especially on the HR side, because not many company, they ensure that their vendors, who supply these contract laborers, workers, staff, whether they comply with labor laws. So this is again something, which has to be considered. I mean, I think this is very important.
So cost optimization from a compliance perspective, I think in India or across the world, you don't have any liberty to choose whether you want to be compliant or not. If it's a law, you have to be compliant. Sometimes what happens is if a client calls me and says, okay, if I'm not complying this section of the law, then what happens? If you see the law, it will say, okay, 500 rupiah penalty. So client will say, okay, 500, so it's okay, I can move ahead, I don't want to do it. But sometimes what happens is that 500 can become 5 lakhs, 10 lakhs, 1 crore, right? So I have typically seen two sets of companies who want to be 100% compliant. The other set of companies, technically, they take a call whether they want to be compliant or not basis the outcome which can have on the company. So there are two sets of companies which I have seen who want to be 100% compliant. One, maybe companies which are wanting to raise funds or go and raise money from the capital market. Because if a company wants to go for an IPO or raise money from a PE guy, they know that the investor who is coming in would definitely want the company to be 100% compliant. And if it's an IPO, then they know that it can create issues later. So this is one set of companies who are very, very serious to basically be compliant. And then increasingly nowadays we are seeing companies who want to be ESG compliant, because there are specific businesses, if they are ESG compliant, then they attract specific funds, because some of the funds are very, very serious in terms of investing in business which are ESG compliant. So these two sets of companies are very, very prudent towards being compliant. But having said that, the company should not be penny wise pound foolish, where they say, okay, today I don't want to be compliant, but later on if there is a penalty which I will pay. So there is a lot of awareness which is happening. I think compliance is the buzzword. So all the companies should be compliant, and that at some point of time will give some value. Otherwise, I have seen companies who are non-compliant. They want to get investments from private equity or VC guys, and the PE guy, VC guy comes in and he does the diligence. Post that, he says, okay, there are a hell lot of issues, I don't want to invest. Then they set up new companies, they try to basically ring fence and then bring all the assets, liabilities here. So maybe we should be very mindful from a compliance perspective that the entire ecosystem and the country today wants the companies to be compliant. Maybe the promoters don't know how to comply. That's why they are not complying. So we as professionals need to educate them. Yeah. I don't see there are a set of promoters who don't be compliant. They need to be educated and they need to be told that this may come and hit later.
Yeah, Prashant, the one thing I want to ask you, you have gone through lots of PE investment where you have supported the company to, and you have spoken also. Investor ask and there is no labor law due diligence happen and there is no compliances happen regarding labor laws. So they don't want to invest, or they put some more condition. They value it on less numbers. This all instances happen.
Yeah, so as I told you, there are two sets of companies. Companies which are looking to raise money from venture capitalists. There, as startups, I think VC funds are more prudent, and they take a lenient view in terms of compliance. But when the company is at a growth stage and when they are wanting to attract PE investments, that time the companies are expected to be compliant. And in both the sets of companies, the investors who is coming in, they are very, very serious on any kind of leakages in the companies, and they will bucketize the compliances into two buckets. One, compliances which are basically bookkeeping, and second, the compliances which can financially come and hit the company. So as promoters, if a VC guy or a PE guy is investing in the company, you have to give a bunch of representation and warranties which have to be backed by indemnities. So if the company is non-compliant, end of the day, the promoter has to give indemnities, and investors will definitely want to invest in a company is more compliant, and the promoters end of the day will lose if there is a financial hit on the company because they have given the indemnities. So PE and VC guys are very, very clear that either you comply, or I will put that as a condition precedent if it's a critical item, or if it's non-critical, maybe they will be giving you a leeway to put it in a condition precedent. But end of the day, all the non-compliance are backed by indemnities. So it becomes more important for the promoters to make sure the company is compliant from day one. Otherwise, he has to put his skin in the game and he has to make sure that he gives indemnities. Otherwise, the investment will not go through. So compliance is very, very important for the companies which are in the verge of raising money and going and hitting the capital markets.
So compliance is not only important from the financial perspective that we don't have to pay penalties or pay interest to the government. In today's context, where people are so active on social media, where the buzz, and the news reaches the market so early, it is also important that to attract talent you have to be compliant. To have a good reputation and be able to attract good talent, get good resources from the industry, you have to be compliant. Otherwise, if in the market, if people know that this company doesn't pay PF dues on time, or if this company is not ethical vis-a-vis a particular HR function, then I'm sure their ability to get talent will be very diminished. So yes, financial consequences, it is there, no doubt. In any transaction deal, investor will discount the valuation when they come across these non-compliances. They will ask promoters to fix the compliances, and then whatever is the cost of compliance, that will be considered for the purpose of valuation.
Vaibhav, your input. You have raised almost 4 rounds of funding in Wipro itself.
Yeah, so I think these compliances are very important, and tracking these compliances, because we have 4 countries operations, and taking, I think, any notice which comes, and all these labor law related notices, nobody will appreciate. But the kind of structure we are working in, and it's almost, I don't think so that any company will be 100% compliant. But at the same point of time, these dashboards and this compliance tracker will really help us in solving this. And I think CFO as a business head also need to take care of that, what is the cost of compliance versus the cost of non-compliance. And till the time that break even is there and there is no reputation related issues, many times such calls are being taken. But I can just take my example also with 5 rounds of funding and multiple rounds of debt. The lenses which were there at venture capitalist stage versus near to listing stage are different. So venture, as Prashant has rightly told, that venture capitalist can take a much more lenient view than if nobody is bothering you, you are also taking it chill. But now of late in last couple of years, we have put a lot of effort on being compliant, and compliance is a necessity, because as the scale is increasing, your reputation will take a hit if you are non-compliant. So I think that is something which we are more mindful now.
My view, compliance is non-negotiable. If you ask me, do we need to comply? I think it's not even a question for a debate or discussion. However, probably we can consider case-to-case basis if it is more than 1% of the company's profit, company's revenue, or more than, we can set a benchmark. Anything that is impacting more than X% of the company's revenue probably need to be discussed. Otherwise, default, go ahead and comply. I think that is how I have set rules for my team all my career. Because for me, it is a brand that I carry on my shoulder, proudly saying I'm a compliant company. And for me, it is an image that you build over a period of time. You must have seen hundreds of companies, IT companies booming in. You still have a little positive mind or a view when you talk about Infosys in India. Not because they are the only compliant company. There are quite a few companies who are also compliant, but they created an image saying we are a compliant organization. Probably you see a lot of social media appreciation from Ratan Tata and Tata Group. It could be true, they are better than others, I'm not denying. But what I feel is they have created a brand for themselves for compliance. They have created a brand for themselves for being there for people. They have created a brand for themselves saying they're not only for profit, they are creating employment, industries, etc., impact in the society. But if you see, Tata's must be the, especially TCS, must be the highest profit-making IT company ever in India, even today. If everybody is complying, they are also complying. Why there is so much appreciation of TCS is only because one, they are compliant, and two, they present themselves and sell their compliance into the public by creating an image for them saying I'm a compliant company. I think that is very important in our careers, irrespective VC, PE, pre-IPO, post-IPO. It's always appreciated as a like army majors get those tags for their achievements. I think we carry it on our shoulders proudly saying I'm a compliant company and I have built that company so and so level.
Totally agree. It's a brand value which we carry ahead. So coming to the down the line, labor law compliances, there are expenses policy, there are travel policy, there are enough number of policy we guys implement in HRMS software, from benchmark of salary cap to travel policy caps, then expenses cap, other expenses, right? So there is a policy prepared by CFO and HR ops or management, and the implementation of policy. There's two different things. How practically you guys face a problem ki policy is there but not properly implemented?
There are two aspects. One, organization is always growing. It's not like what you have seen. People are growing at 5%, 8%. These days, people grow 5, 10% per month, not 10% per annum. So there's no patience for people to do everything manual. So you go for technology or automation. And two, not many or not all technology services companies or product will give you a seamless integration with your ERP or your intranet, etc. And from there you have to have those delegation of authority framework, and you have to have the workflow management frameworks. So if a tool, or assume Keka as a HR, I've not used it, so I'm not sure, but I'm assuming Keka will have a seamless integration with ERP, setting an ability to do those workflows. So if it is so and so value, first you say so and so brand, you are eligible for ABCD. Within that, if it is value is so much, it should be approved by A. If it is above so and so value, it has to go to B. So the tool or the application we use need to have that flexibility to change and implement it. And three, it should not be like, every time I change a process or a flow, I need to come to IT company saying, hey, there is a process, please come and help me changing it. It should be flexible enough. The technology should be flexible enough for me to go and say, within my own IT team, within my own finance HR team, should be able to make those changes. If you need those changes in SAP today, you have to go for SAP consultant who has done the work for you. But I'm sure with organization, new age startup product like Keka would have some HR guy or an admin guy or a finance guy to go and make those changes and edit the workflow channels.
Definitely, you have to set up that process. Who is the right person to change that? You have to give the permission to them.
Right.
Vaibhav, if coming to you to ask, you have also said you have a policy in place, implementing the policy.
I think as far as HR policies is concerned, there is no choice about it, because all these policies define what kind of authority people are having, and I think Satish has covered all the points. I don't have anything to add there. It's just once the policy framework is there, I think we just need to abide to it, and whatever workflow you have decided, after that, if let's say 10 to 15% deviation you are seeing, you need to, as Satish mentioned, that you need to review it on a time-to-time basis. I think when deviations are coming more, that is the time you need to change the policies. I think that kind of a trigger system should also bring in that in last few months, previous acceptable deviations were 5% or 3%. But whenever that threshold is getting crossed, then I think reality is changing. And that is the time we need to do the policy intervention, because as the organizations are growing, that framework policies plays an important role. And if we are changing it for few people and all, it's counterproductive, I would say. So that framework and policy is very critical for all these things, so that it will not be perceived as a people to people it is changing. And at the same point of time, you need to see that threshold, and when that is crossing, that's the time to revisit those policies.
Probably here is where analytics play a role. It's a time to relook into your policy. It should be an analytical output from the system.
So as the exceptional approvals comes and all that, you want to see those in analysis, how many exceptional...
What is the threshold? Let's say your system is processing 1,000 transactions a month, which is as per policy framework, and out of that 1,000, how many you allow? And if that number is being thrown, that okay, fine, your as per overall transactions volume is 1,000 and 100 plus are crossing that limit, then I think that is a time when you need to revisit the policy. Some threshold settings would be there.
If suppose you have put the threshold of 5,000 rupees, nothing is going beyond that. Something is the exceptional approval coming to some authority person in your company. So you want to see those also, how many times he goes and exceptionally approve those.
Yeah, so that is something, that exception report is there to act upon. If you're not acting on it, then those few will increase much faster, because we are living in a connected world, and that news goes much faster there in those areas.
Sure. Praveen, in the times of audit, you might have faced the policy is there, you have given a policy, this is the travel policy or this is the expenses policy, you have started doing audit, and how many times instances happen you are not able to, there are lots of expenses on exception basis, not followed properly on the policy. Sometimes accountant had missed to follow the policy. If it is not, there is no automated tool where the threshold is factored कि कोई apply ही नहीं कर सके. If those are not there, so how many times they go beyond the policy or miss to follow the policies?
Yeah, so this is a very gray area where frequent lapses happen. I mean, this is the reality, especially people at lower level, they tend to use these policies, the travel policy, the reimbursement policy, they sometimes misuse and many a times company staff also, they are not able to identify, which we, in the process of audit, we see that there is a deviation which required special approval, but it was not there because the guy has not noted it. And then when we bring it out as part of audit, he will run to the CFO or senior guy and take his signature and say, yes, sir, now there is an approval for it. So it happens quite often. One reason is that most of the softwares in the market, they are not customizable to that extent, because in India companies have very complex, the reimbursement policy, travel policy, based on grade and type of travel, etc. The way it has to be paid. It is very complex thing. So not many softwares they have capability of customizing it to that extent. So maybe that is one reason why this existing tools are not able to capture it properly.
Many a times Praveen has taken that MRL, management representation letter, CFO has signed off, all the exceptions approved, audit is closed.
Couldn't agree more.
So the policies are framed to be adhered. That's how generally the legal framework would be, right? So if there are exceptions, then there are 2-3 issues which the company has to be mindful. One, it should not become a cultural issue. If the policies are framed and if they are not followed, then it becomes a cultural issue, right? So that is something which has to be kept in mind. Second, the leadership should lead by example. Today, if the policies are framed and the leaders are not following it, then it's a red flag. Then maybe if there are companies who are dealing with data of the clients, and there are data protection policies which have been framed by the company, and if the company doesn't follow them, and then if there are leakages, then that becomes a big problem. That's an integrity issue. So from a policy standpoint, I think policies are made to be followed. There could be exceptions, but when the policies are written, those can be written in a way which are more employee friendly, but from a compliance standpoint, I think it has to be more ruthless and it has to be followed. Otherwise, it becomes a cultural issue. Yeah.
And what is more important, so when companies are smaller, the financial impact is smaller. So maybe sometimes they ignore that, okay, it's not so significant, we can ignore. But as you grow as an organization, this has to be adhered to. So there is no option, because what was a small amount when you were a small company could suddenly become a bigger amount. Because more number of such non-compliances or deviations, because you have more number of employees, more deviation per employee, isn't it? Because you're not checking it, he will do it more often. So this is something for a growing company or a larger organization, it is very important. I mean, they have to have checks and balances to ensure these compliances.
I think there also has to be a practical approach. For example, recently I went through a situation wherein the company was having operations limited to 1 or 2 states, and suddenly they grew faster and they moved all over India. So the same travel to be done by train is policy continuing for last 3 years. So somebody has got a project in Jammu, he has to travel from here to Delhi and from there to Katra and from there to the project site. It takes 2.5 days for him to reach the site. Somebody who is drawing 75,000, 1 lakh rupee, even on his personal travel, I don't think he travels by train. So he's okay to spend that money. Maybe he look for a discount, he's okay to spend that money and go by flight. And as an employer, making so much profit, you want him to travel by train for work, doesn't really motivate him. So probably we need to be flexible enough to understand case to case, and probably have to be flexible to change the policy rather than seeing it as an exception. Yeah.
Adding to the point, I think while framing these things, if HR analytics can come back and say, what is this cost of employee per day? And lot many times these policies are coming from that mind frame only. Let's say you are paying 10,000 rupee per day to that person, or 5,000 or 3,000, and the 3 days he'll spend in the travel, you'll be ending up spending unproductive 10K already, which you could have saved it if you would have done some morning, evening analysis. So I think that people or cost of employee per day kind of a matrix if built in, and that will help in framing policies with some analytics. That will be a good area to explore. What is the fully loaded cost if this guy will travel?
Got your point. So sometimes there are lots of exceptions comes to you. Their employee come and they say lots of drama also, and then you have to approve it. Okay. So in that kind of scenario where you being a ruthless in implementing the policy to whatever policy you prepare, you have seen the taken the all care of working hours, work per day, employee cost. You have taken that he should travel by flights, his hours not be wasted. After that, you made a policy. All that. Still, people comes to us.
Life is always about 10% outlays. Life is always about exceptions.
So it's how you manage those emotional decisions where and there's only one corner, generally one corner, one management, somewhere it is a CTO, somewhere it is the CEO, somewhere it is a marketing head, with no, my employee is taking lots of effort, sales guy comes, sales head comes, my employee is doing lots of effort, he is that, you should approve this and all that. So there's a point comes where you have to be little ruthless.
Yeah, yeah. So
Yes,
basically,
but
the law
how you
is,
manage those stress
the law
also?
is how you set a precedence. Once you set a precedence, you can't say no to the next guy.
Yeah.
Then it will become racism. It will become gender bias and whatnot. So you better only set the precedence first well. And if you have given a precedence to somebody as a deviation, you don't have a choice but to follow that approach.
For me, it's like, do you want to change the constitution? You want to change the constitution, you require all the approvals. You propose a policy change. If those exceptions are coming much often, then I'll say, look, I am the person, or my function is just a doorkeeper or a watchman there. You get me the requisite document, then it's fine. If it is not there, I can't do it. And I have told team also, just use this word, this is beyond my pay grade.
And also you take decision situation based on where you are in the company, where the company is. One, you are a decision maker or not. Two, imagine you're at a 20% EBITDA, you have the comfort of accepting as is. Imagine you're burning money and looking for investors' money to be flown into every 3 months, 6 months, 12 months. You can't be flexible the way you were when you are at a 20% EBITDA. So my view, situation of the company or financial status of the company really matters to take such decisions.
Satish, just this is contrary. I would say the company who are having profitable EBITDA, they'll be forced to have it. Those who are burning, it doesn't matter 100 or 200.
Yeah. You draw more.
This is on a lighter note, but yes.
Praveen, you never faced this, and now you are in that side. You are running a business, so you can see as a CEO itself.
So this is inevitable. I mean, you make policy thinking normal circumstances, and you always have exceptional situation. You can't say no if the employee has genuinely spent, overspent than what was he was supposed to. And then generally they will take pre-approval. They will call you and tell you, okay, yes, this is what I need to do, or this is what I'm planning to do. Can I do it? So that time itself, they kind of take concurrence, before actually submitting any such, deviation. So, and he's right, Vaibhav is right in the sense, if it is very frequent, then you have to change the policy. But some instances will do happen. I mean, there is no doubt about it. As a management, sometimes you keep an internal check that, I will approve, say, X number of deviations in a month. If it is more than that, then, you shut the door that, no, not more than this, X number of deviations up to a particular amount, what will fit your budget. And beyond that, obviously, then you have to be ruthless. You have to say that we are not doing this.
Prashant, you have ever faced, and you are also running Samasti Legal from last 15 years above?
Yeah, 10 years. So maybe, as I said, maybe when we are framing the policies, we have to be mindful what kind of exceptions might come for approval. And sometimes what happens is, I have seen corporates, maybe not relevant here, I have seen insider trading policies of listed companies, right? They build some kind of an exception. So when we are looking at exceptions, we need to see and get into the nitty-gritty of the guy who is asking the what do you call the exception, right? That is also very, very important. Sometimes it has to be, policies have to be compliant, have to be in compliance with spirit or letter, I don't know. So if something is basically it's more of a spirit thing, then there can be exceptions, but it has to be compliant in letter, then it becomes a problem. So there are two kinds of policies, right? Policies which are required under law, policies which are framed internally by the companies. So policies which are required under law, you don't have any choice. There cannot be any exceptions. But policies which are made by the company, there can be exceptions, but it should be drafted in the policy itself who will be giving those exceptions on what parameters. Then only it has to be done. Otherwise, as I previously said, it will become a cultural issue. That's my view.
So you always face this problem. It is the employee experience. It will hit your employee experience if you don't approve these expenses on an exception basis. So how you manage those conversation if you have to give a suggestion to new CFO to how to manage those conversations?
My view, you have to set the culture and you have set the guidelines rather than limiting or people coming to you for every exceptional approval. If there is a logic behind any exception, if there is any logic behind any approval and it is well within your affordability range, I would delegate it to the senior most leader in my team, or I will delegate it to the HODs who will be approving the exceptions. When it comes to keeping a track of it, of course, a good analytical tool which gives me the deviations, the impact of the deviations, and what could be the alternative cost of not deviating, or what could be the loss of opportunity in not deviating, etc., kind of analytics. When somebody is giving an exceptional approval, I will ask them to fill or choose an option why they have given an exception, and run those analytics and get to see which is the major reason why. Most of the times it is like opportunity cost is very high. Somebody is going there to participate in a bidding, he can't be doing by train and participate in a bid, so he will obviously fly by flight. I'm just giving that an example. When you're meeting with business development, when you're meeting important clients, irrespective of your pay grade, you will have to be showing your company's brand image in front of them. You will have to stay in the best of the hotels, you'll have to spend to the best of the restaurants, best of the places that you sit and discuss with them. So you always give an importance and weightage for the business till the time you can afford. If you can't afford, of course, everything, you want to kind of keep it like in a power monger saying, I want to take a decision for A, B, C, D. But when the organization is grown too big and too fast, you can't really control. I think then the delegation is really important. Yeah.
Vaibhav, coming to you in the lower margin business, it's very important for you to keep every penny to be counted properly. So employee experience is the one thing. People come to you, there is a lots of employee experience issues, you are not approving this, not approving that. So how you manage those in day-to-day life, and what kind of suggestion you will give to your new CFO?
No, I think there are two things. One is employee experience, and another point is what is your fiduciary responsibility. So fiduciary responsibility is to have the framework and follow the framework. And if day to day you are getting such issues, then you need to again go back to the drawing board and change the policy, I would say. Because at times if you see, we are dealing with 4,000 plus employees, and the person who is near to me or I met him, there will always be some kind of bias is there. So how to avoid is to just see that how your chart of authority has been planned, and if chart of authority allows you to do something, you can take it on an exceptional basis, doing that root cause analysis. Is there a genuine, or it is more frequently coming in? And at times, if you at the first instance you say no, then rest of the things work out. If you are keep on accommodating, then where you will stop? So stopping at first instance is good. It hit them hard first time, but next time they understand no nonsensical things can be pulled across. If it is a real solid business case, it will come to you. Otherwise, people will not come to you. And you just need to just say this. You change the policy, I am with you. If policy allows you, I am doing it. There is no, I would say, any kind of ambiguity should be there or any kind of a biasness should be there, because the people who don't know you will pay the price of it, of following the policy. The people who get away with it uh, will always feel a sense of entitlement. So I think set the framework and lead by example. You should also follow that. And if you and your team exhibits it most of the time, then you can definitely demonstrate it for rest of the world. So the major problem I face is not for the external folks, for my internal folks. They come back and see, sir, lot many things we are approving, but I should remember, you are doing your job, you are getting paid for it. I am getting paid for the job which I am doing. So let's make it clear. Let's not take it more of a emotional kind of a thing.
So net, you're saying no deviation for employee engagement.
I think you just need to change it. If there are
Exactly.
definitely something which will be genuine and all. Let's say if we talk about a female employees and all, their safety and security is of utmost importance. So if policy says some amount, but they are traveling to some remote places and all, you just need to provide those kind of support to them which is required.
My view, simply go and propose for change in policy if your budgets allow. If budget doesn't allow, HR heads headache to see how employee index, happiness index is being improved.
So coming to financial planning and budgeting, you guys have done lots of financial planning and budgeting.
It's all life.
All life from the starting stage.
Yes.
To
And mostly on Excel.
I've used TM1 Cognos, but everything is download from TM1 Cognos, make it and again upload it back.
So how the data is more important? Base data is very important for your financial planning. The basic data which you get from obviously HRMS software employee. What about the BD guys give you, sales guys give you, everything base data, how much it is important?
It is like you can't survive without it. It's bottoms up approach. Most of the companies, 95% of the companies do bottoms up. So you multiply those number of people, average salaries by band, by division, by department, and you bottoms up and evaluate your annual budgets. And then at top, somebody looks at it, what is their targets for the year and what they want to achieve at a board level and how they want to achieve it. Then you go trimming, cuttings, blah, 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 and then you finalize your plan. Without bottoms up data, I don't think anyone can do a budgeting unless they say zero-based budget. But trust me, even if you do zero-based budget, you still need data.
Yeah.
What is your average CTC of a band 7?
Yeah.
I'm just giving you a thought, you still need the data. Whether you call it bottoms up or top down, the data is required for your annual operating plan to be made. So without data, you'll be you'll be going into some research company and taking averages, or you'll reach out to 10 of your friends and take averages and live with it. This is more accurate to have an internal data to be used rather than different company, different industry, and different markets data being used. So if you say you don't have a data for building an annual operating plan, then I'm doubtful whether you can really achieve that plan or not. Yeah.
Great.
Only thing that you will be worried is the seasonal influences, the rains and the weathers, etc., or some black swan events like COVID coming in your way, etc. Otherwise, without this data, you can't really do a good planning.
So, but definitely you guys have if you like to take this question, if lots of time data is given to you for financial planning, suppose every department is given to you, how many times those data is matched with your last year trends or last year? You need to just recheck, recompile, or data points check.
So I think broadly the industry which I am working, that dynamism to data is not that much, at least the kind of a healthcare segment we are looking at. There is a regular escalation which is there in terms of payroll escalation and minimum wages escalation and the kind of sensitivity analysis which we do about it. Base data, I think Satish has rightly covered. You can't survive if you don't have the right set of base data. Only thing which matters a lot, what kind of assumption you are putting in, and that assumption refined based on your past experience and how the future is looking. So these are the major problem area. I think people sitting in the room most of the time will not have any issues for first 3 months of their business. Because major issue happens after Q2 onwards because people don't have visibility, and the macroeconomic scenario changes much faster, and that is where that growth hypothesis or assumptions take the head. I think most of the time CFO's problem is how to see that Q4 is taken care.
Yeah.
Q1, Q2 is generally managed, but how the Q4 numbers will be there and what kind of a, I would say, you are building some kind of numbers back of your mind that you have assumed certain growth, but if that will not be there, how you are going to compensate. I think that is some area where over last couple of years I have spent time on it, because we have mastered the art of Q1 up to Q2, but after that generally the reality strikes to us, and based on that our 3-4 years numbers takes
More
the
than
head.
business, you look for stories.
Yeah. So the way you have talked about COVID is there, wage inflation is there, business is not growing, global economy recession, all this gyan, we put it for investors presentation.
But just to answer your question straightforward, like, whatever data we get from the support function, say HR, etc., the good planning analysis guy will always cross-check with previous reported numbers and sit for a reconciliation with them and see if there are any differences. And then only we use the data. Yeah. And
But
we also
base
do a
data
market
is-
comparison and see if we are way above or below the market numbers.
So add to that what Satish was mentioning, under IFRS, and I'm coming from not only IFRS, now under Ind AS also there is a requirement. So whatever data has been used by the management, which is MIS data, or for the purpose of decision making, whether it is resource allocation or business planning, whether it matches with the year-end audited number or not. If not, then under Ind AS 108 or IFRS 8, which is operating segments, you have to disclose that along with the reconciliation in the financial statements. So, and then it will happen invariably, because audits will happen in the month of May or June, and you will have MIS in the first week of, say, April for March. And there will be difference because a lot of adjustments will come. So theoretically, every company will have to disclose that in the audited financial statements. So that is a reporting requirement. And on the financial planning side, Ruchita, when you said financial planning, what I can think of is the word collaboration. So while there is a financial word there and people expect CFOs or the finance team to do entire financial planning, the reality is that it is a team effort. It is not possible without involving, say, the business team, the operations team, the HR team. So you need to involve everybody, because a lot of inputs go, and this is when you can make a sound business plan. Otherwise, the all financial plan, the HR will come running to you after, say, 2-3 quarters that we were planning some training activity which you have not budgeted for example, isn't it? So you need to involve all the departments, all the teams, and it has to be a collaborative exercise when you make financial plan.
So apart from this, there's only question which is raised from my team. So how my sales and marketing team wants to ask this, apart from financial planning and all that laws, compliances, they want to ask how CFO are going to creating more and employee more confident or more self-driven employees through automated finance operations. So if we, how confident, how Atmanirbhar you can make an employee with through automated finance operations?
Oh, that's really part and parcel of our life. In fact, we keep looking for a lot of tools that can make our life easier, whether you call it robotic process automation, reconciliation, balance confirmations, tax reconciliation. Every day our life goes in around reconciliations only. We get tools available in the market, but how compatible are they for your existing ERP? Not everybody is an SAP or Oracle only. There are quite a few other ERPs people are surviving with. So the integration feasibility and how easily the data can move and help you reconcile, how efficient your team is to use those tools. One is having good tools in place, two is integrating seamlessly is another important, and three, your people should be able to use those tools. So basically the team need to be kind of fundamentally trained on the fundamentals of technology uses. My view, it is very important. Every company which will be of decent size in operations, whether it is financial operations or whether it is business operations, everybody who is in decent size would be in need of these tools. I'll give you an example of an e-commerce company. Even if somebody doing say just 250 crores of turnover of an e-commerce company, their number of transactions and touch points will get into millions. Right from click, order place, money moving into your bank account, settlement taking place, then settlement money moving into merchant's account and your account, and from there customer's account and refunds, and just so you have so many places of touch points of finance. You need tools to reconcile. Similarly, number of transactions, you need to have bank reconciliation. Number of transactions, you need to have GST reconciliations. So to give you an answer, we are always in search for right tools that can meet our needs. We don't, probably we need to be better in saying, hey, I need a tool. We generally don't look at it proactively, but if somebody comes and tells me this is a great solution I can give you, I think we'll be always open to consider, look for it, trial and go for it. Yeah.
Vaibhav, if you have to, how you are creating your employee more self-driven employees through automated finance process?
I think few years back, which used to be luxury, is more of an hygiene. I think entire perception of the organization get carried away. Then other than the field job is more about that what kind of automation is there and what kind of tools are being provided to it. So I would say that this is more of a hygiene element now, and as we move to whether when Gen Alpha, Gen Z will join the workforce, then we need to consistently reinvent also. What is the luxury now will be hygiene most of the times. Like previously, employees used to follow up for claims, salaries used to be done on 5th and 7th. Now it is, I think very soon we'll be reaching up to 25th kind of a time also, because anyway 2 prior working days, and also these kind of evolution is happening. So there is a pressure on the organization also to take care of this hygiene part and be a little ahead of curve in these things. So I think it's a no-brainer thing for me.
Praveen,
Just to add, what a system can do, a human should not do. That's the new age funda. So if a system can do, you should not do. Today I've asked somebody, hey, can we do deactivating 200 vendor masters? Then they said, please ask the IT company to develop a code. They want to run the code so that automatically 200 companies get deactivated. I said, how many you can do in a day? This yearly said, I can do 50. So 4 days, 4 man days of a 25,000 rupees salary guy can sit and complete this work. They wanted a requirement to be given to IT company and who has to develop, deploy, and that need to be tested by you and then integrate with your system. So that's the reality of life. And those are all expectations.
Agree, totally agree. In our races, we used to do it manually and close it.
Timelines are going to be only stringent, in fact, with the latest, the wage code, they are planning to make it mandatory to do full and final settlement within 48 hours. What is not happening in 48 days? So with lot of follow-ups. So if you are lucky, then maybe in 3 months you will get, and if there are any pending things, then maybe it will take some 6 months or something like that. So yes. So use or automating a lot of these processes, I don't see there is a choice. There is a pressure from the cost side, how much you can automate things. Secondly, in a competitive marketplace, your employees will also measure you in terms of how tech savvy you are. So if they are coming from a company where things used to be automated and they used to have all this tools in place, and then suddenly they find that they'll think that this company is so old, or they are not up to the mark. So and then again then it will set off the change. So you have to be if not the leader, but at least you have to follow the trend. You have to automate a lot of these processes. So I think this is the future.
What are your inputs on this, Prashant?
No, see, again, from a legal side, going back to your previous question where you were talking about data. Now, data, again, when CFOs are writing their revenue models, business model, there's a lot of insight on data which might be required, right? But from a legal side, you need to be aware what data can be used and what data cannot be used. So I work with a lot of healthcare companies where if a company wants to monetize their data and they want to sell it and create a revenue model, they need to basically understand what are the laws, right? So from that perspective, data mining is good, but we need to be mindful of what data can be used at what level, and we need to follow the data protection laws. So I don't know how your software is helping that, but there are a lot of personal information which should not be leaked to a third party, how confidentiality is taken care. From that perspective, I think automation is very, very important.
Yeah, coming to the answer, yeah, we are GDPR compliance. Apart from the Data Protection Act, which is India, we are Europe mein GDPR compliant. So our all website and software is GDPR compliant, 100%. So that is where we take care of our protection, SOC 2, GDPR, and all those. But yeah, I want to ask you how the automation you are thinking in future, how the automation will come.
From a legal perspective?
Yeah, from the legal perspective.
Yeah, so I think there are a lot of tools which are available in the market who are basically trying to make sure that the labor law compliances are taken care. But I think still we are struggling to find a great tool who can basically help a company which is operating on a multi-jurisdictional, in multi-jurisdictional geographies within the country. So I think from that perspective, companies who have thousands of employees having multi-jurisdictional presence, operating, say, if a retail company is operating in 10 states, they may have, say, 2,000, 3,000 outlets. So that kind of volume, I think currently I have not come across any software which is able to help the companies because the laws are very dynamic and they are changing. But as I previously said, next 5 years, I think the government is also very, very stringent and they want the companies to be compliant. And the mindset of the promoters and the entrepreneurs are also changing now. They want to deploy money and they want to make sure that the companies are compliant. So going forward for compliance professionals and tools like Keka HR, I think it's a good time, but we need to make sure that we are basically having that kind of capabilities and a product which can help the market.
Sure. Thank you, everyone. Just want to have the Q&A session. Anyone in the audience want to ask any question from the panel?
Good evening, everybody. My name is Amulya. I represent Gainsight here. I see that a lot of CFOs sitting here. So what I wanted to understand, maybe as a CFO, is that I'm sure that you kind of look at multiple, dimensions while thinking about how the company grows organically, inorganically. But are there specifics that you always love to track, or today you are tracking maybe on a daily, weekly, monthly, quarterly basis, just to see that you are in sync with the growth objectives that you have set? And is it also kind of syncing when you see your results coming? So if there is anything that you personally kind of do that can be kind of a value add for us.
Sure. So basically what I do, I mean, as my profession, what I do is I look for what is the most important top 10 metrics of my company. I track them almost on a daily basis, where I visit at least 2-3 times a week. What I can live, even if I am not attending to it for a week, 10 days, probably I'll track them once in 2 weeks and 2 to 4 weeks kind of time. What I do is I put a lot of effort on the month end so that none of the important aspects are missed. So the month end I do as if it's a statutory audit done by one of the big 4 organizations. Build huge files of physical as well as digital information. And I spend good time, and I ask my general managers, VPs, whatever, to spend good time so that they're ready for my questions to be answered. And I make sure I spend good time with them to review everything. So there, over a period of time, I have financial performance, I have business development initiatives in the pipeline, I have rolling estimates to be taken care, I have my metrics now and how they are likely to be looking in the remaining number of months for the full year. How am I likely to close the business by end of the year? And then I look at compliances and my risk matters. Risk again, look at to reputational risk, brand image risk, or if I'm a financial services company and all, I look for regulatory risk, more regulatory risk, and more ALM. I was working for a large NBFC, so ALM compliance on a daily basis. Are you meeting your cash flows, etc. So I do make my monthly review almost a 2 to 3 day process. very diligently I follow. And once I do that, after that month, I'm very sure I'm on my toes to answer any question you ask about past, any question you ask about remaining number of months in a year. So I think that will always be helpful. And that book closure process of the 3 to 5 days effort by the team will make you easy go for your annual audit. For a full year audit or a full year due diligence, you put for those 12 files, physical files or your data room, 90% of your audit is done. There I look into whether my BRS is done, my cash flows are availability, how past cash flows are used, how future is projected, when am I likely to get money in, etc. In this checklist or in this process, it is not like overnight I become an expert, but over a period of time I carried that legacy. And wherever I go, it only gets improved further. All compliances are taken care, etc., etc. That really helped me. You can try that.
Yeah, that answer is helpful. Just to add on, like any external factors or global indicators that you also think to kind of.
See, you can't change global indicators, right? So you only consider what is happening in the world, one, for your business, two, in the countries where your business is in presence, whether it impacts your business or not, and three, what is likely to come. The global could be an economy fall down in US that might affect your IT industry, that might affect your Indian exports to them, that might affect your international export from there to, import from that country to India, that can affect your FX risk, dollar to, all currencies only hedged against dollar, that can affect your hedging challenges and dollar to rupee, rupee to dollar challenges, and that can affect your overall economy of the India stock market. If your stock market falls down, you will see India market is also down by 3 to 5% over a period of couple of days. So in that, I would say, a macro level data I look into from an international perspective. But if my business is domestic, for example, when I was running larger NBFC, I was talking about, my view is always limited to Indian financial services or Indian economy, how micro lending is happening, how banks are lending, what RBI is thinking of, what Modi ji is thinking of, etc., etc. And at the end, if I have to do some impact funds to be raised from abroad, or if I have to do a low cost funds to be taken from impact creating lenders from US or other countries, probably those are the limited areas of international. Otherwise, broadly, my business is limited to India. So similarly, when I was working for a health tech, it is always in and around the technology. Yesterday, I was talking to a couple of doctors together, and I was talking more technology on healthcare industry than themselves, and they were surprised that I know HL7 integrations, I know how information gets stored, how digital data storage of healthcare industry doesn't mean scanned images of the information, it is the data setting into those tables, etc. So I think it's a matter of curiosity and ability to learn in the respective industry. I hope I answered your question.
Yeah, that was super helpful. Thank you so much, Mr.
Thank you.
Thank you.
All right. So I think that was all from the audience. Thank you very much, speakers. It was a great pleasure listening to you all. So, all right. So, thank you very much, speakers. That would be all.
Thank you.
Thanks, sir.
Big round of applause. Thank you. 10 minutes. In lieu, because there were a lot of questions about what Keka is, right, and what it does. So in next 10 minutes, I'll try to give you a quick visibility in terms of what Keka does and to the extent of services that we provide today through our platform. So we need a couple of minutes for setups, and then we'll get started. All right, so what is Keka? Over the screen, everything you need to build a great company. What do we need to build a great company? A lot of times it's, most of the times it's the people, right? A lot of times it's also the data. It's also the strategy, right? So it includes every single thing that we do today in our workplaces, which kind of helps us in building a great workplace. How can Keka contribute into that is something which I'll try to explain in the next 5 minutes. All right, so if I talk about what Keka does, as I said the last time I came, Keka is an end-to-end employee management platform. When I say end-to-end, there are a lot of functions which HR and finance as a department take care within an organization. Although it seems like an organic function, but if you look at the essentiality of every single aspect of work that these two stakeholders do in an organization, it's actually soul of everything. So if I talk about what Keka does, we'll start with the very first bit of where does Keka start. So while a new, any new organization comes to us and talks about digitalizing HR frameworks or finance frameworks for the organization, the first thing that we ask is, what do you have as of now? So when we talk about what do we have as of now, almost every single organization which is not operating over a platform has the data of the people over Excels. So Keka as a platform, the very first thing that we built as a platform was the core HR module. Now, core HR module contains all the core human resources functions that you require to do every now and then, which includes managing your employee database, which includes all the different aspects of managing day-to-day functions which you need to do in HR. Now, it could be documents management, it could be small little things about helping people with the set of information that they need. So core HR platform, all right. So there are a few dashboards that I would like to bring to your notice, which will give you a clear idea about what does the system do. So if I talk about core HR is basically the soul of the system. This is where we configure your existing workforce into the platform. While we configure, you can actually configure any set of information that you require. So, all right. So as soon as we add the data into the system, the employee directory gets created with all the important pivotals like department, locations. If you have something more in your organization, we can actually take care of that as well. So you can add your people into the platform, and that is where the entire journey begins. The self-onboarding and other aspects I will also talk about moving a little further. So while we add employees into the platform, at the same time, every organization has a certain structure, a structure on which the organization operates, the organization structure. Now, organization structure is something which is largely dependent upon the type of organization that you are, type of industry that you are in. So if we look at IT, the structure of the organization will be different. If we go to banking, there will be branches, hubs, regions, and aspects like that. So Keka, you can define the organization tree. You can define the organization structure. Can we focus on organization structure? Right, fair. So again, based upon who you assign as reporting managers, the system takes care of all the different aspects of defining the organization tree and charts and so forth. So the dynamicity of adding users or adding new employee who join in, the system takes care of all of that, keeping the historical data that you have placed into the mind. All right. So once the core HR functions of organizations are settled, while you can configure all the different kind of aspects like the letters that you want to give to people, all the different employee lifecycle letters, from offer letters to transfer letters to appraisal letters, you can configure in your format where people can acknowledge, and all the different workflows which you currently operating on, all of that can be taken care by the platform. So system comes with a plug and play analytics in all the modules of the platform. So while we talk about analytics, there are largely 4 different types of analytics. There are descriptive analytics, which talk about the current status of the organization. There are diagnostic analytics, there are prescriptive analytics, and there are predictive analytics. So Keka comes with all of the analytics. All right, coming back to the pointers, we'll not go into the screens of the platform. It might delay the entire process. So the first thing is that you can manage your employee database. You can put up the existing database, the historical data that you have about your people analytics or compensation analytics into the platform. Once these fundamentals are there into the platform, we go about looking at the tool from a journey standpoint, an employee journey standpoint. So if you look at, for any organization, the employee journey always starts with talent acquisition. To manage talent acquisition, we have an applicant tracking system in our platform where you can configure all kind of job flows, the workflows for your job postings. You can take care of the requisitions that are there into the organization, from raising the requisition to the candidate hiring. All the essential functions can be taken care by the platform. You can manage, the system is pre-integrated with all communication tools like Zooms, Teams, to make sure the effective communication happens wherever it is required with the right set of stakeholder. Now, talent acquisition kind of as a process ends with an employee joining. Right after employee joining, the onboarding as a process becomes the next critical process for a user. So we also have a digital onboarding platform in our system where the complete dynamicity of onboarding an employee can be taken care as a workflow into the system. So if I talk about this dynamicity, it is there, there are n number of tasks which an employee needs to do. There are a lot of tasks which managers are supposed to do. There are a lot of tasks which are supposed to be done by HR and finance department. All the right set of stakeholders will be communicated with the right set of triggers at the right time as soon as the candidate onboarding is starting. So we also have the validation concepts into the task. I won't go into the details. If anybody has any queries or anything related to whatever I'm talking about, we have more people outside. You can always discuss any problems that you face related HR to our people. Now, As an onboarding process, you can define 30, 60, 90 days of onboarding program into the platform, and you can make sure you also have a bird eye view about where these new joiners are. How many of them are on the joining week? How many of them, again, the stages of onboarding changes from organization to organization. So the way we have designed the platform, you can configure your own brackets, your own policies as per your convenience, and the system operates in a plug and play manner. So once the onboarding of the employee is done, the HR ops is the next big thing. So tracking of leaves, tracking of attendance, all of those are extremely easy in our platform. The system takes care of all the different logics which are required related to the leaves or attendance management of people. Enforcing the policies, complex policies of attendance management like people late coming, overtime, all of that can be automated through the platform. Right, so if you look at some of the analytics dashboards are user-centric again. So if I talk about end users, they have their own set of dashboards which give them a clarity that what is the set of leaves that they have, what is the attendance punctuality percentage that they have, what are the different goals that they have, right? Any finance-related information like pay slips, tax declaration, all of that exercise employee can do over the platform without any manual intervention anywhere. The other aspect is the managerial dashboards. So the one that you see right now is a managerial dashboard, where the managers and the supervisors have a clear visibility. How many of the workforce is available today, this month? What could be the potential productivity that we can have? So all of those resource management, all of that can be taken care over here. The complexities like multiple shifts, plants, operations, all of that can be seamlessly done over the platform. And again, all the modules are interlinked. It is interlinked with your payroll to make sure that whatever policies you're enforcing on people, all the different aspects of payroll get auto-configured based upon that. All right, so once HR Ops also had some other little functions as well. Can we go back to the features page once again? Fair. So leave management, attendance management, overtime automation, all of that can be done. Payroll, we have a full-fledged payroll engine available at our platform where you can automate all the complexities related to the payrolls. From defining the salary structures as per, again, bands or whichever way you actually want to do it, you can set up your finance structure into the platform, the comp structure. The system comes, again, with plug and play analytics for all the different aspects of finance. You can look at these analytics, which are dynamic in nature. You can slice and dice your analytics just to make sure if you want to look at data from a certain relevance, you can always filter down into the right set of data for you. So we, as a tech, any technology, was built from an aspect of enabling the people. Enabling the people by providing them that set of transparency and data which they require to become more efficient. So we, as a platform, work as that data receptor for your people analytics or for your people data to make sure that any analytics that you want to operate or want to take a look at, all of that becomes extremely easy once Keka is there into the workplace. Fair. So other than the payroll, if you have multiple group of companies, you can take care of that as a function. Performance management, all the aspects of performance management, from goal settings to goals tracking to performance appraisals, reviews, revisions, rewards and recognition, pulse surveys on different aspects like employee happiness index. All of that can be done from the platform in no time. So the system comes with, as I said, like there are pre-configurations that we have designed in the platform. There is an interface available for you where you can very easily control what settings and policies you want to keep for your people. Any point of time, anything you require to change, you can just change the configuration over the platform. Even the policy documents get updated based upon the changes that you make. So we are making sure that all this work, mundane work that you have to do on day-to-day basis, that can be taken care seamlessly by the tech, while you can focus on more strategic or more human-centric part that is required to be done in the workplace. So that was a quick walkthrough of what Keka does. For more details, of course, you can contact our team.